Good afternoon, everyone. Hello, and welcome to the best presentation I think you're going to witness today at ACG Intergrowth. We have a great session on business development, a topic near and dear to my heart. My name is Tony Banks. I'm the Director of Business Development for Grant Thornton. I'm also a member of the ACG National Board, as well as been fortunate to be on the Intergrowth Committee this year. So thanks for coming and supporting ACG at this outstanding conference. So I get the honor today of introducing these two panelists on a very dynamic topic that impacts all of us. These expert panelists will offer up some key strategies on how to successfully leverage business development in new and exciting ways for your organizations. So with us today are David Crean, Managing General Partner at Equitos Venture Partners and Managing Partner at Cardiff Advisory LLC. David has 25 years of buy and sell side expertise with life sciences and healthcare companies working within strategic biopharma companies, private equity, investment banking, and venture capital. He is also a rabid Pepperdine Wave fan. Great campus down there. Love that place. Also next to David we have Emily Holtman, Managing Director at Permanent Equity. For over a decade, Emily has led origination efforts working with advisors, operators, and owners to structure deals that provide meaningful liquidity while preserving legacy with minimal operational disruption. And Emily is a very proud Missouri Tiger. Take it away.
All right.
Perfect.
Well, thank you very much, Tony. And, great to see everybody and getting back to somewhat normal. It's good to be out and shaking hands, kissing babies, and seeing everybody in a three-dimensional format, right?
Yep.
So thank you very much. As Tony had mentioned, I'm actually doing two things. One, maybe it makes me a little confused, I'm not sure, but I look at deal flow in a very interesting way. One, as a venture investor in the life science space. It's typically not a private equity space. It's very, very high risk, a lot of FDA involved. But I'm managing partner for Equitos Ventures, and we came up with the name with Equitos because we see it as an equitable investment partner, and it's all in life science. Very, very exciting. With today's capital markets, I'm spending more time there right now because there's a lot of great buys, a lot of discount buying right now, with valuations in the public markets basically taking a crap and spilling over to the private markets. Also a registered investment banker. I've been doing that for about 8 years and recently started up my own firm, Cardiff Advisory, small team, boutique M&A advisory, mainly working on the private side, both buy side and sell side. And it's a great, like I said, it's a great skill set, great mix to have both as a venture investor and as a registered investment banking, working with entrepreneurs, boards of directors on options looking at growth and exit. And I'd like to now introduce you to Emily Holdman. And before doing that, if you ever want to connect with us, get out your mobile app. In LinkedIn, you can see up in the search button if you want to take a scan of that, and we can be connected and continuing the dialogue. Emily.
Thanks, David. So I hail from Missouri. We are the only private equity firm in our town, so we're in Columbia. If you've been there, you've most likely been there for like a football game or maybe for healthcare reasons. But we, got started as operators. So essentially had a few companies that had been started by our founder and had an opportunity to buy a lower middle market business. And that started our portfolio, if you will. And so it was sort of one of those things where you do some things and you get lucky, right? As an entrepreneur, we did some things in VC and got lucky on those. But the only thing that felt like it was structurally something we could scale was to invest in lower middle market opportunities. And so that was starting in the late 2000s. So 2007 is when the firm got started. I've been there since 2009. My background, though, is in marketing. So I was in journalism and econ undergrad. and got my start in major motion picture publicity and then moved into ad agencies. So part of what we're going to talk about today is, really more of lead generation type strategies, which is what I hail from in my original career plan. But sort of stumbled into private equity as an operator. And we built up, and so over 9 years, we were a family office, and we were just reinvesting our excess operating cash flow. And then in 2016, began raising our first fund. So our fund model is something that we are known for, and it sort of speaks to the name. Our capital is 30-year funds. So we have a 27-year initial commitment, and then renewal periods that begin in year 25. And so our value proposition to a seller is around us buying between 51 and 100%, but doing so with no intention of selling. And we also typically don't use leverage. So if they're averse to debt, or if the business is best held in a long-term strategy without debt, we become a fairly compelling opportunity for them, and are often considered alongside things like ESOPs and strategic sales as an alternative. So we have 12 companies and focus on finding what feels like situationally the right fit. But being in the middle of Missouri, we don't get out to these things very often. And so our deal funnel is generated in sort of a different fashion and has been over the long term. So that's part of what I think I'm here to talk about. So I'm very honored to have been invited to join you all today. So we're going to get started, and I think the best way to frame this up, if you're like me, you need to organize your thoughts a little bit. And so we wanted to give some frameworks by which you can hopefully go back to your teams and have conversations about, the hygiene and scalability of your business development strategies, right? So if you think about it as, we were talking about this earlier over lunch, you can get lucky. Like, people can do deals, but there are reasons to get lucky, and then there are things that you can strategically do repetitively that are going to engineer yourself to be able to do deals at scale. So when you think about that, the first thing is, who are we in the market, right? So the purpose of this matrix is for everybody to figure out what quadrant do you actually live in, right? So we're sitting up here and we represent both, I'm the generalist, right? So we're situationally specific. We don't focus on industries, whereas my esteemed colleague over here with way more educational credentials than I could ever hope for is much more of a specialist, right? So we have different things to offer the market. And our way to attract opportunity is going to be pretty vastly different. And then the other is how you generate lead flow, right? So whether you're more focused on the inbound opportunities and how people are going to find you, or how you are going to go find them and hunt them down. So if I just frame it from our perspective, right? So permanent equity generally lives in the generalist inbound. So I would say we're about 80-20, and most firms should find themselves somewhere between a 70-30 and an 80-20 in one of the quadrants, right? So we're about 80-20 in the sense that we have a couple things that we've developed really strong skill sets in, so you can have some specialization that you can talk to narratively, but it's not what you're leading with. So that's that 20% there. And then you have like the 20% of, hey, we know that we're looking for add-ons in aerospace distribution, as an example, right? And so we have some things that we'll go outbound on, but it's the exception, it's not the rule. Mm-hmm. David, you want to talk about how you think about it?
Yeah, no, I thank you very much. As Emily mentioned, I am a specialist. I look just exclusively at healthcare and life science. That's the only thing I have been doing. It's the only thing I want to do. And frankly, it's a great spot to be in, despite all the looking at XBI and the biotech bloodbath right now. But it's still a great spot. As I mentioned, it's a great area to actually have a fund in and deploy capital. But when I look at that specialist side, both inbound and outbound, the reason I like being a specialist versus a generalist, and by the way, they're both good. If you look at fund performance, there's no significant difference between whether it's a generalist or a specialist. A number of studies have shown that. But in the space of healthcare and life science, I find to be a specialist to have definitely some benefits versus some costs. Benefits such as efficiencies, superior selection on looking at deal flow, and then just in terms of in terms of competition. And then there's certainly some costs to doing that. I'm less call it the inch wide, mile deep, right, as opposed to the mile wide, 1 inch deep. There's some costs and some benefits to doing that. From the generalist side, very broad knowledge, very diversified, higher volume of outliers. I'm more about quality. She's more about quantity. And I think having greater flexibility from the generalist side as well. So,
For sure.
I think it's important to understand kind of that rubric, if you will, and that framework, as Emily said. Ask yourself, what quadrants are we in? And it's very dynamic. It might change over time. But both are very, very effective strategies. And I think you just need to understand benefits, costs. How do you guys define yourself? What is your competitive differentiation? What makes you so special?
So many of us represent money, right? And so the thing that we want to make sure everybody understands is that business development can't be about how much money you have. If it is, then you're selling the commodity, and we know how that works, right? So you're just going to be competing on selling at the highest bid or buying at the highest bid. So the question is, how do you create your differentiation? And so we thought up, kind of 5 areas that tend to work as a bar graph. So if you think about what are the things that we can tell a story about as a firm, and how can we structure our conversation with the market as such, then you're focused on some of these more than others, right? So as a generalist, right, we focus a lot on style and how we go through a process, right? And then we also, of course, focus on outcomes, but most of it is on the style and process, because that's what matters to the seller, right? How are they going to feel, and what are the outcomes for them, more so than the ultimate outcome, which is more of an LP conversation and an operator conversation. Mm-hmm. I'll let David speak to the specialist side, but the thing that universally matters is record, right? So you have to figure out, what is our record story? So that one kind of sets off to the side. And then you think about, how do I scale and lead versus follow in the other areas? And that's something that, as an organization, once you, again, figure out kind of the quadrant you live in, then you start to develop, what is our story under each one of these categories? And then start to prioritize that story in a way that you can create more of a refined pitch, and a way by which you can start to create content and ideas about how you're going to approach the market in a way that sets you apart in some capacity.
Yeah, I think that's a great point. From a specialist standpoint, I find process actually to be very similar. It's very universal. Yep. I don't do anything different.
Yep.
I try to look at, being a specialist, I try to look at founders, entrepreneurs, whether you're VC, or maybe you have a $5 million EBITDA company, and they're playing in the healthcare space. For example, that expertise and that deep domain expertise that I bring, or my team brings, to the founder, to the entrepreneur, to me, incredibly helpful. Because I have to sell that message, right? I have to sell the message to either a strategic buyer or a private equity firm that is interested in getting into the space, or maybe it's a bolt-on. So I find that outcome and expertise are incredibly important. Process is agnostic.
Yep.
If I was a generalist, I would do the same thing. But it's more about, I try to look at, why are they going to bring on an investment banker who's a specialist? I try to look at it through their lens.
Yep.
So what can I bring, what value can I bring to the founder or to the entrepreneur?
Right.
And I find what resonates, hey, Crean, I want somebody who's going to speak the 5 syllables, right, on these long words in the healthcare space. That's what I find that resonates. And it's just easy for me to do more thorough due diligence.
Yep.
It's so there's.
I think there's
risks
a
and benefits.
balancing act, right? So like there are generalist investment bankers who would argue that process is everything, right?
Yeah.
And they have a very specific way that they approach the market and steps that they will take somebody through. And it's interesting because you'll have sellers who are attracted to that, and then you'll have sellers who say, I want to find the right fit, right? Stylistically, we are better for the right fit, right? And that's where style is a lead for us, along with process, because we're not very good at abiding by process.
Yeah.
So we have a long conversation with investment bankers about the inability we have to be patient through that. So I think that it's nuanced depending on where you sit and how you're approaching the market, which is the fun part and why we can all represent money but have very distinguished positions within that market.
Yeah, so I think these 5 areas are super important. When you start thinking about it, how much money is sitting out there on balance sheets or as dry powder? Frankly, money is a commodity, all right? And so you have to think about it from the eyes of the seller. How are you going to differentiate yourselves?
Yep.
What makes you so special? So looking at process, style, outcome, expertise, and then the wins on the board.
Yep.
The record. So
We all got to do something.
that's why we say money is it's not just about the pitch, right? You have to really take a look at what you're doing differently. And because you're competing against a lot, whether it's on the generalist or on the specialist side. I can tell you on the specialist side, those are all very, very important. I'm sometimes playing against not even the middle market, but the larger markets, especially in the healthcare life science space, where these big banks, J.P. Morgan, Morgan Stanley, outside of the middle market, and frankly, they're in line to try and get $3 or $4 million in minimum in fees. And I just go to the white space. I'm much below that in the lower to middle market, and that's not where a lot of iBankers will play in, especially specialists in that area. Yep. I'm happy with $250,000 in minimum fees. I don't have that capital structure that they have. So how I have to look at those 5 areas is super important to me as a specialist.
Yeah, absolutely. So if we think about that story you're building, right? So back to the beginning, we're trying to create business development strategies that will scale, that will endure, that will not cause you to have to pivot your pitch every time you talk to somebody, right? So when you think about that, you can't just focus on the wins, although your record will matter over time. We all know this, right? But one of the points we want to continue to make throughout the conversation is like, how do you test yourself? How do you know if you've got a business development strategy that feels like it is something that can scale, right? And so that story that you're building should have a goal. And from our perspective, and this is shared from both of us, is it's about building trust, right? So we've had a lot of conversations in developing this speech around, what is transactional and what is relational. As those of us who, sort of to Tony's point, we've been around the block for a little bit, what you learn is you want to be as little transactional as you can be, and you want to lean into building trust over time, right? And so when we think about business development strategies that will scale, it is about that trust building and building that story in such a way that will endear people to trust you is part of your goal, right? So if you think about that litmus test as a team, that's one of the things that we think you should strive for.
Yeah, it's a great topic to certainly ask yourself and your team, relational versus transactional. As Emily said, we're both relational business development managers. I've had people who are very transactional in nature, and it doesn't resonate, in my view, with founders and entrepreneurs when I'm getting together with them. They like to bring you on board, develop that relationship, bring you on their board of directors, almost use it in an advisory capacity, and they're screaming out to the world saying, I need help building my company. You can't really do that very effectively in a transactional way. And an illustrative example on relational versus transactional. So let's just say you've looked at something multiple times through due diligence, and ultimately you and your investment committee came back and says, we're going to pass. Well, in a relational standpoint, what Emily and I would do is spend time with the entrepreneur or their board of directors. This just really doesn't meet our investment goals, but I'm going to make some referrals for you. I'm going to put you in contact with other potential investors. That's a good relational approach to things, as opposed to a transactional, we pass. That's just, I'm being a little tongue-in-cheek there, but you're just very matter of fact. It's just not the way we do business. Or even going through due diligence in a transactional standpoint, you're communicating with the seller or even the buyer through databases, through an electronic data room. And there's not really a touch and feel to that, as opposed to the relational. You're going to develop this relationship very early. You're going to cultivate that relationship. You're going to have calls with management on a very frequent basis. Yes, you have the electronic data room as a ancillary aspect, but you're working with them. You're trying to help them build a business and or sell the business.
Right.
So.
The transactional process is the baseline, but everything else is where you can actually develop strategic value.
Right.
So to the extent that we're going to work through the matrix, so I'm going to take the generalist point of view and talk you through some of the strategies that would be employed from that side of the matrix, and then David's going to talk you through the specialist side. So if we take the generalist inbound as the first area of quadrant, this is, again, where our firm spends 80% of our time. So I don't like to fish, but for whatever reason, fishing analogies work really well when it comes to marketing. So you'll see it on the next slide as well. But in general, when it comes to inbound strategies, you're thinking about giving people points of access to you, right? So I refer to this as like hooks in the water. So you want to have enough hooks in the water and have them be strategically located in such a way that it invites people to opt in, right? And so you have to think about what does that look like and what are the points of access at which people will engage. So there are a lot of different ways to do this. One of the things that we got started with really early was a content strategy. So back in like 2011, we started writing a Forbes column. Again, being in the middle of Missouri, you don't have a lot of opportunity to get in front of people physically unless you want to spend all your time on the road, and we live in the middle of Missouri for a reason. So we thought about it from the standpoint of how do we scale conversations while being located there and being true to who we were. And so that for us was in the form of content development that could be distributed. So for the first few years, having a third-party distribution was really important for us because there was some trust transfer, right? So again, if you think about points of access and how they relate to your firm, you're thinking about how do third parties help to endorse or open the door and gain familiarity for the person you're trying to reach, right? So that third-party element was really important for us early on. That led to our ability to develop larger mailing lists and more direct access to people that we wanted to speak with. So that was really helpful to us to then sort of transition into not having to adhere to third-party editorial guidelines and being able to really write what we want. So I don't know how appropriate this is for this event, but like we have an essay on our site that's called the No Asshole Policy. And it is explicitly called the No Asshole Policy, and it is one of the most referenced pieces of content we hear from people we talk to. And it gets passed around, and we've had that piece of content since 2013. And it's one of those things that if you think about evergreen pieces that, again, are a piece of story about your firm that can live on and can serve you as a differentiator, those are the types of things that you're looking for. So obviously, we don't take ourselves too seriously, and we have a bit of an irreverent tone. It's not going to be appropriate for every firm, but for us, it was appropriate. And we were a little tongue-in-cheek about it, but it's actually like a 5-page essay with a lot of research cited within it. And it's intended to be a serious conversation around cultural code of conduct, but catching people's attention with the title, right? So you think about those types of things as an example of something that when you are trying to create hooks in the water, you're trying to invite people through association, through potentially irreverent tone, but some sort of eye-catching invitation, right, to engage. And then you're thinking about other things you can participate in and other representations of yourself. So your people are an example of this, right? So your brand equity personified is an example. One of the things that we've invested pretty heavily in is our podcasting. So we individually do not podcast. We did one podcast tied to a book that we published, and that was a moment in time. But we have participated fairly frequently in podcasts for industries as well as for the investing community at large, through invitations and also through just networking with people. It's been really helpful to our firm. We actually underappreciated how important the personification would be, in the sense that while you're having one conversation, a lot of people feel like they're participating in that conversation and they gain a level of familiarity with you that causes them to then want to reach out to you, right? So you think about that as the types of things that you're trying to put out into the world that people engage with, and then they say, okay, that's something that I would potentially want to be in contact with, right? And that causes them to then reach out. So then when you get to the distribution side of this, one of the things that we try to be really conscious about is passive versus active engagement and where you're going to go talk to people. So you don't want to be patronizing, and you want to give people the ability to consume and think and then react in method of their choosing, right? So what in general we've abided by is that mass is a way to just tell a message, right? So you should have a point of view, you should tell your story, but you are just putting that out into the world with no expectation of response. You should make it as widely available as you can. So a very tactical example of this in our firm is that we write long essays, and then they also get published as a PDF. Why do they get published as a PDF? Because old men, who are the majority of our seller targets, right, don't actually go read the stuff on our website, but somebody will send them an email with an incredible trust transfer attached to it that gives them access to that piece of content, right? So those are the types of things that you sort of like engineer the serendipity along the way, that gives them, again, a point of access that has trust transferred as a part of it, that gives them the ability to engage. The other thing that we pay attention to is who you're talking to. So not every piece of content needs to talk to everybody. We talk to talent, right, pretty regularly. We talk to the employees of target companies pretty regularly, and we talk to sellers and advisors, right? So when you're thinking about how you're crafting the message and where you're going to make it available, you want to be sensitive to who can both interact with that and who may also stumble across it. So one of the reasons I bring this up is because if you have an inbound strategy that may attract a seller but won't attract their employees, you've got a problem, right? So you have to look at those disconnects, and you have to figure out how you're bridging gaps and recognizing all the stakeholders that are involved in that decision. So that's kind of some of the stuff within inbound, and we're going to have a Q&A at the end, but to the extent that this is kind of thinking about how are you putting the hooks in the water, right, and giving people points of access is really the overall strategy there. So then if we move to outbound, outbound for us would be more, when you're talking about a generalist strategy, right, it is a quantity game. And this is one of the reasons, we really like Relational. Outbound can be a struggle, and this is why we're mostly inbound oriented. We're better at telling our story and giving points of access than we are at going at such a scale that we can find situations that are attracted to our model, right? Because it's very stylistically specific. But we do have some peers who have done phenomenally well with this. And as we all know, independent sponsors and searchers have done phenomenally well with outbound strategies without, in some cases, a specialist focus. So when you think about this, you're thinking about you're going to find where people are already interacting, right? You've got to go step in front of them and say, hi, I'm here, and this is what I have to offer. So the big thing within this is more of a data analytics place. So if you think about a lead funnel, you're thinking about how do I get information that not everyone else has, and then how am I telling my message? So the message will matter, your points of differentiation that we talked about will matter, but at the beginning, you just need to know where you're gonna go find these people, right? So if we think about where you can go find them, I think that, in general, there are likely people at this event who are representatives of data that everyone can subscribe to. My issue with that is that, again, it's not specific to you, right? So you've got to figure out what are you layering that with and how are you using that data differently than your peers. And so some of that can be in original sourcing of that data, and some of it can be layering on top of it and how you're slicing it and how you're thinking about your targets within it. And I think one of the interesting things is, we all work with different sizes of companies. So if you can find a size oddity, right, within a data set that other people are using for a radically different purpose, you can potentially find some really interesting opportunity there. But this day and age, you can also hire large groups of people to do a lot of original research on your behalf. You can do so through organizations, or you can do so directly, and it really depends on how you want to manage that process and what you're hoping to get out of it. But that part of the piece is critical if you're going to have an outbound strategy, right? I have yet to see a silver bullet, but I have seen compounding strategies that tend to work better than others. And so most of that is based on what you would imagine to be traditional lead generation funnel strategies, right? So it's very successive and procedural in process, tied to the quantities that you need to end up with a result at the end, right? So we think about this in terms of frequency of touch point. So go back into your memory of marketing 101, right? So you're thinking about reach, and then you're thinking about frequency. So you got to find enough reach through your data set, and then you've got to get to frequency to a point that you end up getting them to somehow respond to you, right? So there are multiple tactics that have been employed across the industry. If you talk to sellers, and I'm sure many have, they'll say it feels noisy from a seller's point of view quite often, because there are so many emails, so many letters, so many calls from people both in the iBanking community and in the buyer community saying, hey, do you want to sell? How are you going to get their attention? Again, goes back to the message, right? So you really do have to think through that piece. But the other thing is, being relentless on outbound is pretty much critical. Like, you've got to continue to reach out until you elicit some sort of response, and then you've got to figure out what you're doing with that response. So we've seen where there are strategies where you're doing a combination of physical and digital on a regular basis to a point where you're ending up getting people to elicit responses. This is particularly true at the smaller end, where you've got kind of a single owner dynamic, and it's worked really, really well for the searcher community. But they're waiting till like 0.7, right? So it's touch point 7 to 13 where they're getting that response. So it's definitely not a short-term strategy to get that result. But there are other options, right? So you can think about things around the lines of, how do you create relational strategies? Like, how do you look at the market and say, where can I have trust transfer on an outbound basis, and how can I map the market in such a way that I can gain access to potential sellers? We've seen, whether it's employing a board of advisors on an industry basis and having them work as ambassadors on your behalf, or if it's a combination of, strategic consultants that you are partnering with on a referral basis to work towards that end. But those are the types of things where we've seen some success in going on that outbound track. And many people have found phenomenal success, but if you don't think about it in terms of that frequency of touch point, you end up in a struggling position to make the volume work on your behalf.
Emily, that was just a great overview on inbound and outbound. And just to go back to one of your initial comments going into this, I love the ethos that you guys have on the no a-hole policy, right? Because as an investor, I invest in people first and foremost. Technology, in my sort of investment thesis is people, technology, IP.
Yep.
And I think whether it's an established company with it's putting out great earnings, or even on the VC side or earlier stage, it's still the same for me. So I call it a no jerk policy, but for me, one of the three of the criteria why I invest is, is it transactable, right? Do they have a realistic expectation on valuation? And 3, the no jerk policy.
Yep.
I think we may have put the a-hole in there too, but it depends. Anyway, but if they don't meet the 3, I'm not going to take it.
Yep.
I've been sorely disappointed. It might be transactable, but do you like to hang out with the people that you like to hang out with, right?
Right.
So I think that's super important. So,
And if you can have those narrative strategies, right, that people can remember, it helps in framing and in general, people are remembering who you are and to call you sometimes.
Yeah, so, in terms of being a specialist, I probably spend about 70% of my time on the inbound coming in. There's few specialists, maybe in the mid-market or even the low market, but I'm just dealing with, and they're coming from great referral partners. So if it's not coming from a referral partner, for example, I'm less likely to take it. So I'm spending the majority of my time on inbound. Outbound does occur in certain sectors, something like contract research organizations, contract manufacturing organizations, life science tools. Great space. Private equity loves it. Large strategics like that space. And if I'm not making the inroads or seeing that deal flow, I'm doing that. But I would say the majority of what I'm seeing is on the inbound. I didn't have the fish hooks in the water. Couldn't come up with a great metaphor there, but frankly, our brand equity, you can see a lot of the same methodologies, a lot of the same distribution and calls to action, just getting on the radar, very similar to what Emily had produced on her generalist inbound. I would say one area that we are spending a lot of time on, where we're actually establishing ourselves as credible partners, whether it's on the iBanking side or on the investment partner side, is we do a lot of thought leadership, a lot of writing. You can take a look at what we're doing in LinkedIn, writing articles. We're out there. And I'm getting a ton of just what I call organic outreach by sellers and by private equity. Hey, I hear you're a specialist in this area, and do you have anything going? I'm going to show a teaser that I typically get from a private equity that to me resonates. Sometimes I'm getting things from private equity or from strategic buyers which I just don't see the relevance. Why are they reaching out? Maybe it's just a mass email. And I think it's super, super important to sort of, as a buyer out there, to really make sure your message resonates. So it's very, very similar, but I'm doing a lot on the methodology. We write a lot, and companies are calling saying, here, you're a thought leader in this space, and I want you to sell this company. Mm-hmm. So it's super important to get out there. People do read, the articles that you're putting out there, and you see Outbound. It's less of an issue with me. I actually have the hockey analogy: skate to where the puck is going, right?
Yep.
So I do a lot of that in 3 areas in healthcare. I'm starting to do probably a 4th one too in terms of digital healthcare, AI. There's just a lot of change, a lot of dynamics going on in that space. But it's with the contract research organizations, contract development manufacturing organizations, and life science tools. I love those businesses because they're cash flow, and they're selling to academics, government, pharma, and biotech. It's a beautiful space, and many of them are just looking for some efficiencies for professional buyers to come in there and professionalize them.
Yep.
But I like to skate to where the puck be. It's a great spot from the market standpoint. There's just a lot going on there. I talked about quality versus quantity. I like to work with good companies, not the jerks, right? Mm-hmm. Because there's a lot of bad companies out there that, frankly, are needing some good CEOs to come in and clean it up. But as Emily had mentioned, what makes you so unique if we're all using the same databases, right? How are you telling your stories? That's why, it's really important to look at highly differentiated source data. You can't call yourself differentiated because we're all using either Preqin or PitchBook, whatever. It's like we're all looking at the same data. And I think that's where I like to go to this very last part. It's like this domain expertise. It depends. It works in healthcare and life science, maybe in technology, but it doesn't, perhaps not in other areas.
Yep.
So it's super, super important. And frankly, I do a lot in networking, relational, referral relationships. I would say 70% of my deal flow comes from M&A attorneys and IP attorneys. It's great, and that's where I spend. I'm out meeting with 40 attorneys who are active in healthcare and life science on a monthly basis, and I'm getting the calls from them or from the clients that they're working with. That's that inbound aspect. So I love spending time there. After the attorneys, it's wealth managers and other financial advisors. I'm getting about maybe 5 to 10% just organically off of LinkedIn. Just because I'm out there, I'm connected to some 23,000 people. They know what I'm focused on. So that's where I think it's important to spend that time there on cultivation, building rapport, being seen as a credible partner in this journey.
Yep. So when we think, you're putting all of these recipes together, right? You've got a message, you've got some sort of tactical distribution strategy, and you've got an intended target. The whole point is you want to get to a point where people remember who you are and they want to actively engage with you. So that goes back to trust. It goes back to something that feels scalable. So as you think about as you develop things, there are things that you can develop that seem fun. This happens a lot in our office. We have a lot of people who are fairly creative. They're like, ooh, this sounds like a good idea. Let's go do that, right? And then you put it through sort of the filter and you get to the point of okay, does this actually invite people to come and talk to us, or do we just think it's cool, right? Do we think it sounds smart or, is really entertaining, which is more commonly where we trend. But to the extent that you kind of have to put it through that test to say, okay, in the marketplace, do we have something that is compelling that people are going to engage with? And that's the point of something that, again, will feel scalable over time.
Yeah, and the reason I put this sort of buy-side teaser in there from a specialist standpoint, I was making the comment earlier on getting teasers from buyers, mainly private equity, who are maybe more generalist, or maybe they're a specialist. Maybe they say that healthcare or life science is an area of interest. But when I'm looking at their teaser, I don't see it.
Right.
And it's not very compelling for me as an iBanker to take a look at. I just threw it. This is a sort of a fictitious example of what I saw as resonating with me. They're telling me about their team, their core focus in the lower middle market or in the middle market. It's about healthcare. Well, what specifically? Well, I'm looking at CROs, CDMOs, life science tools, or pharma or biotech. What in that area? Is it therapeutics or is it companion diagnostics? I can look at that and I can look at their track record and also say, all right, how low are they willing to come down? I was working with obviously a lot of private equity. It's playing in the 3 to 4 million EBITDA, and it's interesting how that has changed over the last couple of years. And now taking a lot of inbound calls, we're going down to $500,000.
Yep.
I can only suspect that that their LPs are probably yelling at them, hey, put money to work, right? But if I can look at it and truly see that they're truly differentiated, I'll listen. I'll make that phone call because I'm like you. I'm getting inundated from strategic buyers, from private equity. Hey, I want to meet with you, right? And show me your deal flow. Or let's talk about this. And it almost seems like it's just a grab, and it's a cold call.
Right.
It doesn't resonate with me. Frankly, I do the same thing, unfortunately, with entrepreneurs saying, hey, I'm trying to raise my $10 million Series A, but it's not coming, for example, from a referral partner. It's just a cold call. It's probably got about a 1 or 2% chance for me even taking a look at it.
Right, right.
But if it's coming from a quality company and there's a good referral relationship tied to it, and I can look at their teaser and go, I get it. they're worth a call.
Yep.
And I think I maybe had one more slide, but very, very similar. They talk about the value add. They want to work with entrepreneurs. They want to work with the owners, the CEOs, the CFOs, and really truly understand what they're going to bring to the equation. Because a lot of times I'm seeing these teasers, and it's just very transactional, and it doesn't resonate with me. I'm representing my client, the seller, and their board of directors and the business owners, and I want to make sure that I'm doing the right thing for them.
Yep.
And so those are the sort of the 5 key areas that I need to see out of a teaser, and a lot of times I'm not seeing that. So sometimes I will call them up and say, I think you need to revamp it after having that conversation with them.
Which is very relational of you, very consultative, help them out.
Look, they have money. I want to see them put it to good use.
Yeah.
And there's a lot of good companies out there, a lot of good technology. And unfortunately, I just don't think people are selling themselves or showing sort of a differentiation.
Yep.
So go ahead.
All right. So
we have just about 5.5 minutes.
We were so sure that we were going to be done early so we could all go to the pool and do Q&A over margaritas. But we're using up the time. But to the extent that, I think everybody understands it, right? But your whole point is, how are you going to meet people where they are? How are you going to help them understand who you are? And then how are you going to work together? And that is something that is building a scalable business development platform, period, right? The outcomes will manifest from that, but that's not the only goal you can have in developing something that you're going to be able to staff, that you're going to be able to, create differentiated outcomes with, right, honestly. So that's what we want to see everybody do.
Yeah, as I made a comment earlier on, I talked about how if you look at specialist versus generalist fund performance, there's not really a significant difference between the two. What is important, though, is that you're going into it with an intention. It's an intentional sort of approach, but very positive way on how you want to deploy capital. What do you want to look at?
Yep.
Because I'm not seeing really a difference between generalists and specialists.
Yep.
But if you go in there with a very intentional approach to it, that to me is winning.
Yep.
So.
And that's the obligation of everybody, right? Whether you're sitting in an iBank seat or a buyer or you're a CEO looking for capital, you've got to help everybody understand what your goals are, where you are, and understand where they sit as well. All right. Thank you, guys.
Now it's up to you guys to ask questions.
Nobody wants to be the first one.
And I believe there's going to be a mic going around if there are questions.
Did we solve all of your problems? Because I still have some. So one of the things we didn't talk about is we probably should have put this somewhere in there, but experimentation I think is really important within business development. And so running, we're not fully committing to a content path or whatever it may be, right? But experimenting with it is really important, and you need those feedback loops to continue to improve upon what you have as your foundation. And that's a space where I would encourage people to spend time with your team on a regular basis, like hygiene check. Are we doing the same thing and expecting a different result?
We have a question.
Do you have a percentage of budget that you would recommend allocating to that type of experimentation versus things that are, definitely going to work?
Can you repeat the question first?
Yeah, so she asked about budget for experimentation versus budget for things that you sort of have as common practice within your team. So I would apply the 80-20 rule again. And you sort of think about it as most of the time on business development, you can start small. You don't have to overinvest. And so if you can start small and get a feedback loop that feels profitable, right, in the long run, then you double down, right, and you continue to build off of that. But you can start with kind of that balance, and I think it tends to work.
Yeah, I'm around 12 to 15% of my budget. How did I get that number? I'm married to a chief marketing officer. So I always ask her, I said, what should I be putting towards it? And that's kind of one of these, right? And it seems to have worked really well. I also come out of pharma where they're spending almost 30 to 35%. Now, I think that's a little drunken sailor stuff, but I think 12 to 15 is more calibrated.
Yep.
Gonna get over there.
Yeah. Yeah, it's a great question. In my referral networking on a monthly basis, I'll get together with headhunters, executive recruiters like yourself, and talk about, hey, they actually have the finger on the pulse, what's going on. They're out there recruiting either a CEO or boards of directors or CFOs, some of the key positions. And so they're a great source for opportunities coming my way. What's important for me, though, is that it's just not a one-way relationship, right? That I need to refer to them. So if I do see good CEOs out there or CFOs, chief marketing officers, what have you, that are expecting, maybe they're expecting an equity event or maybe they're wanting to get out in the market, they know that I'm fairly well connected. I want to make sure that I'm sending them to you because you probably have some needs. You might be looking for that particular resource. So it's super important that it goes both ways. It's quid pro quo, right? It's just not coming to me and then I don't send any love your way. So that's super important.
I think there's
Totally agree with that. I was just going to say, too, that it's okay to not be able to fulfill and to say, yeah, we're just going to be honest with each other. And I mean, for me, I always like to hand over referrals or make introductions. And sometimes you could use them, sometimes you can't. And if you can't, if you were to then refer to somebody else, that helps my clients as well, and vice versa. So it's a very good two-way street and beyond.
Yeah.
It's always oriented with the outcome, right? And I think it's also being respectful of other people's time. Like, the check-ins don't always have to be getting together. You need that initial point of contact to get to know each other. And then I think you give each other invitations for trigger, right? So we do it on a quarterly basis. We have, our opted-in network. We're constantly giving them a trigger and saying, here's what's going on in our world. We would love to know what's going on in your world, right? And similarly, we're on their lists in some cases, or if they don't have a list, that invitation exists for them on a regular basis. But we're not saying like, hey, we have to get on the phone every quarter and see how you are, right? We're conscious that we're all busy, but if you need us, we're here. And so it gives them kind of that passive versus active engagement opportunity. Great.
Well, I want to be cognizant of everyone's time. I think we're out of time right now.
Yep.
And hopefully you like Emily and I are still a little dumbfounded by the $44 billion acceptance by Twitter. In a very large
Bigger deals are getting
in a very
done
large
today.
LBO of a public company.
Voice the
So,
checks.
but thank you
Lots
very
of
much
theater.
for your time and attention.
Thank you for the most part.
Thank you.